You're listening to The Whole Truth, a Resources Rising Stars podcast.
Hello and welcome to this episode of The Whole Truth podcast. I'm Paul Armstrong. Minerals 260, or MI6 as the code is, has been one of the great success stories of the share market over the past year. 8 months ago, the company was worth $30 million. They bought the Bullabulling Gold Project near Kalgoorlie in Western Australia. Today, the market capitalisation is $1.5 billion. What else needs to be said? They've grown the resource to a whopping 4.5 million ounces. And that's just not a big inferred resource. That includes a 3 million ounce indicator resource. This project is the real deal by any metric. McFadyen is the managing director. He's just got back from the BMO mining conference in the States, talking to some of the biggest investors in the world. He got a huge response to the company's recent funding announcement. And obviously the institutions love a company in a tier 1 jurisdiction with a resource of this size. He takes us through why the company is in a rush to get on and develop this. They are so confident in the project. They're already building infrastructure like dongers, water bores and the like, and they haven't even finished the DFS. That says everything about how confident they are in this project. Luke takes us through the studies, the drilling, the resource, and where to from here. Luke, you've just got off the plane. You've come back from the BMO mining conference in the US, one of the biggest mining conferences in the world. You've been speaking to some of the biggest investors in the space. What do they have to say to you about gold?
Still a lot of support, Paul. So our investor base is global. We've got some of those largest investors in the world, like you say. Still a lot of support for gold. We're still seeing inflows into ETFs. We're still seeing central bank buying. We're still seeing a lot of support for hedging against inflation. So globally, still a lot of support for gold. Now,
you're an economist by trade, as they say. We won't hold that against you. But what sort of feedback are they giving you, and what do you make of the macro conditions? You were there just right at the start of the Iran war, if we can call it that. What do you make of the situation and the impact for gold?
Yeah, look, it's just another good tailwind for gold overall. So whether it's physical or whether it's a hedge against inflation, it's just another tailwind to support that central bank buying, hedge against inflation, ETF inflows.
Now, in your conversations, obviously a lot of these big global funds came to you to talk to you about the Bullabulling project. What do they have to say?
Look, it's recognised as a significant project, not just in Australia, but globally. We've got 4.5 million ounces sitting 45 minutes away from Kalgoorlie. You can't repeat what we've got. So yeah, there's a lot of interest, both from domestic and international funds.
And is there any concern among these investors that Bullabulling has obviously grown on your watch significantly? You've got 4.5 million ounce resource now. The stock's had a terrific run, and we'll look into that in a minute. But is there any concern that perhaps those meeting you now might have missed the boat?
No, not at all. We still remind people that we've actually only had the asset or owned the asset for 10 months. We're at the beginning of our journey of developing Bullabulling. Yes, we've had an excellent run, but we still think there's a lot of upside from here on in. We're in the process of essentially converting ourselves from an exploration company last year into a developer this year. So if you think of how valuation of companies change through time, we've got a long way to go still.
Now, there is a horrible phase in the life of a mining company or a mining share referred to as the Lassonde curve, obviously named after the economist who put this together. But it's in simple terms, it suggests that a mining share can run hard like MI6 has, and then it will go into a period of you might call relative boredom, where you do the dull but worthy things of economic studies and drill outs and the like. Is that a risk here after the big run, after the resource growth?
No, we don't think so, Paul. I mean, we just signed a $220 million funding package with Franco-Nevada that accelerates and de-risks the project. So that typical curve you talk about is absolutely true. We've seen many companies go through it. But let's remind ourselves, we started with 2.3 million ounces. We jumped to 4.5 within 8 months. We've just signed a big funding package. So we're actually essentially jumping over that point in time where people sometimes do get stuck. In addition to that, you go back to the macro setting that we just talked about, where that macro setting is really putting us in a great position to be able to develop this as fast as possible.
Now, let's look at that, because as you say, you're trying to skate across the top of the Lassonde curve, to coin a phrase, create your own steam by drilling further. Resource growth is, at 4.5 million ounces, some people might say, well, why do you keep drilling?
because there's a lot more gold out there. There's no doubt we still see a lot of opportunity in the resource itself, but a lot of our focus is also about de-risking the resource for operations. And so there would be an extensive grade control program, extensive geotech, extensive met drilling program, and it's all about preparing us to be able to operate this thing and ramp up as smoothly as possible.
Now
So it's a combination of resource growth and de-risking the resource.
Right. So when you talk about de-risking, you've got, of the 4.5 million ounces, I think, 3 million are in the indicated category.
Right.
So it's relatively de-risked as it is.
It's fantastic
It's
as it
not like
is.
you just
That's
got a
right.
whopping inferred resource that
that's
won't
right.
make the cut.
Yep.
So you've already got a big indicated resource. But it's you say in your presentation that you took to the States that it's open at depth and along strike.
Yep.
Are you looking for growth in the 4.5 million ounce figure, or are you still just trying to get more of the 3 million into the 4 figure?
It's both, to be honest. We want, the more indicated we have a larger reserve, will result in a larger reserve, and a larger resource will give us optionality going forward. What we're targeting is ounces that are shallower than what we've got today or a higher grade than what we've got today. So it's all about improving the value.
So
of the
optimising,
project.
getting
Absolutely.
the juiciest, most rewarding ounces.
Absolutely right. That's right.
But this is all open pittable.
Absolutely.
So you say you're looking for shallower ounces. I mean, how shallow can they be?
Well, remember, we've only owned this for 10 months. So we're still learning about the geology. We've learned a lot, but there's a lot more to learn. And we're applying that knowledge where we think there's a lot more shallower ounces up dip from where the current resource is.
So where do you go to in terms of a pit? I mean, the deposit is outlined over what sort of dynamics at the moment?
It's going to be a 4 to 5 kilometre long pit, 600 metres wide and 300 metres deep. So it's an enormous pit. It'll be one of the largest in Australia, but the opportunity is still there at the same time.
So you're looking for shallower ounces within that same one existing
Or
pit?
within the footwall itself.
Right. And what does that do then? Presumably boosts the DFS.
Lowers the strip ratio, increases the ounces.
Yeah, it makes more money.
That's right.
That's really what it's about
That's
now, isn't it?
absolutely
It's
right,
about
yep.
optimising it. Now, while you're drilling here, you're doing economic studies?
Absolutely.
Where are they at?
So we're due to release a PFS by the end of June this year. That'll be in conjunction with the release of the maiden ore reserve. And then off the back of that, we'll also update the resource as well, which will flow into the DFS work.
Right. So you've got a lot of news flow here.
Absolutely.
But I hate that word de-risking. It's an awful word. The mining industry loves de-risking, but I know as an economist, you're going to absolutely salivate over it. But it is essentially trying to upgrade more of the inferred to indicated, but also show what the economics of the project could be.
That's absolutely right. Like, this is a large-scale open pit project in one of the best gold markets we've ever had in the history. And so it's all about showcasing the economics of what we're going to build and operate.
Now, let's look at that funding deal you did just before you got on the plane to the States, a royalty deal. Take us through what it's about. Franco-Nevada, the counterparty to the deal, the biggest royalty provider in the precious metals industry in the world. Mm-hmm. The stock went for a great run on the back of it. Why do you think the market reacted so positively to a royalty deal?
I think when you look at the scale, if you look at the reputation of Franco-Nevada and you look at what we're going to do with it, they're the reasons why the stock had a really good response. Franco-Nevada, as you say, is the best and largest royalty company in the world. Their due diligence was extensive, so they've essentially blessed the project in that regard.
They've given it a clean bill of health, haven't they?
Absolutely.
Right.
And so that was 3 months' worth of due diligence across all areas of the project. And at the end of that, they paid a premium for the script that was part of the funding package too. The royalty itself is a 1.45% royalty on top of the existing one in some areas. So the way to think about it, Paul, is that we bought Bullabulling for $166 million last year. That's 100%.
You got to say that slowly. $166 million.
Yep, for 100% of the project.
And the company's now got a market cap of $1.5 billion.
That's right. And then we've sold
Wow.
1.45% of the future revenue with the royalty for $170 million. And so that's what a year can do to a gold project.
So
a gold project
at the risk
like
of sounding like Paul Keating here, you're becoming a feral abacus. What does this tell us? What does that relationship between the value of the royalty and and what you paid for the project tell us?
What it tells us, Paul, is that Franco-Nevada see a lot of upside to this project. They see a lot of benefits to having Minerals 260 developing this project, and they've put their money where their mouth is. And
because they're only going to get a percentage. It's got to be a percentage of something.
That's right. And so they see a lot of upside to us developing the project. And that's where we see we're aligned. We're aligned in getting this project into operations as quickly as possible.
So the bigger the denominator, the more money they make.
Absolutely right.
Right. So obviously, as we said, it's a big vote of confidence in the outlook of the project from the biggest provider of royalties. Now, fair to say, the royalty agreement has upset a few people around town. namely brokers, I suspect, who stood to make millions of dollars in fees from had you gone down an alternative funding route, i.e. a conventional share placement of sorts. Why didn't you do that? Why did you go down the royalty route?
It's all about value, Paul. We felt that the script was undervalued. And then at the same time, we also had a fantastic opportunity to work with Franco-Nevada and the opportunity to sign a deal with them that we saw was incredibly valuable for the company. And I think the response to the share price has justified the board's decision to do what we've done. But we still love brokers. They're still our friends. We still talk to them.
As much as anyone's a friend with a broker.
And look, I mean, ultimately, we still got to continue to fund this business going forward too. We're going to need more than 220 going forward. So it's not always just one selected pathway. What we've selected is the best project, the best funding option for us and the project today.
Right. And does it also remove the get the monkey off your back in terms of being seen as come raised for the time being?
Absolutely, yeah. Look, it takes away that funding risk immediately, and that's, again, probably one of the reasons why the stock had a run. This takes us well and truly beyond FID, and as we announced in the announcement, that we'll be starting development activities imminently. And so all of a sudden we transform from exploration overnight into development.
So you'll be spending some of that money building dongers?
Absolutely.
So what is happening on site? Are you
So we're still exploring. So we're still doing that exploration program, which has now been expanded. And then we start investing in the project itself. So the money will go into the ground. We start developing the bore field that we'll need for construction and then operations. We'll start developing the camp that will be for construction and then operations. We've commenced DFS activities for MET and geotech. So it fast tracks everything that you would typically do after your DFS or even PFS. And we're doing.
So you're actually building. Another horrible phrase, infrastructure, but
absolutely.
But the accommodation, the dongers, as you say, the bore fields, the things that you normally do after a FID.
Absolutely, it's unique. It's a unique situation, but Bullabulling is unique. This macro context is unique. This funding arrangement is unique, and so all of that means that we aren't going to follow that typical process as you described through that Lassonde curve.
Yeah, right.
We're actually going to build this project well and truly.
That's what it's all about. This strategy is. I can see where you're going here. You want to skate across the top of the Lassonde curve. You want to get into the construction of the project. I mean, when's the FID scheduled?
Start of next year.
Right. So normally the sort of building dongers comes after you've done a DFS.
Yeah.
You then make a FID. You then go to the market and raise a whole lot of money, and then you start building dongers. Yep. But because you've got the money from Franco-Nevada up front, and you've obviously got a very high degree of confidence in the quality of the ore body and the like, you're able to pretty well turn this conventional schedule on its head and say, well, we'll start building things before we've made a FID.
Absolutely right. This is not a marginal project. This is a phenomenal project in, like we keep saying, that macro context is really important. And so because we've got that confidence in the project, because of the early signs through the PFS look fantastic, the board is more than happy to continue to invest in the project well and truly ahead of that typical process, like you say.
So does this expedited schedule reflect, the relative impatience of Tim Goyder? I mean, he's the chairman. He's got 7%. He's known for always being a man wanting to do things in a rush. Tim doesn't waste time. Is this schedule partly a reflection of Tim's urgency to get on with things?
Yeah, look, absolutely. There's complete alignment across the board, including Tim, of course, that we want to move this thing as fast as possible, as best as possible. Yeah. And that's exactly what the team is out there doing today.
So what happens now? You've got the resource, as you said, the resource update coming in the middle of the year with a reserve on it, and the economic studies in parallel. Obviously some drilling results to go along.
Drilling results imminently, studies, resource update, maiden ore reserve, DFS, FID, all within the next 10 months. So it's going to be a busy 10 months, that's for sure.
But at $1.5 billion, you've already got a lot of success under your belt. How heavy is institutionally is the share register now?
Look, from the initial raise about 12 months ago, when we raised the initial 220 to buy the project, we already attracted a lot of institutions such as BlackRock, Franklin Templeton, Rest Super, Samuel Terry. The top 20 is heavily institutionalised already. And we've continued to attract, particularly in the last month with the announcing of the Franco-Nevada deal. We've got a lot of North American institutions. But the heart and soul of any company is really that retail base. We still enjoy engaging with the retail shareholders. Retail shareholders have driven a lot of companies to success, and we still engage with that side of the business as well.
Excellent. Thanks very much, Luke.
Thanks, Paul.
You've been listening to The Whole Truth, a Resources Rising Stars podcast, produced by Resource Media, hosted by Paul Armstrong for Reed Corporate. Please note that Reed Corporate does not provide investment advice, and investors should seek personalised advice before making any investment decisions.